right, come on in the room. Welcome, welcome. Welcome to another episode of Unlocking Your Legacy. I'm your host, Keith Robertson, the Fin Coach. I want to thank you for taking time out of your busy evening just to tune in and see what it is that we're going to be sharing this week. You know, a lot of times information is public, but a lot of times it's not public information. So we want to bring something of value to you and your household. You know, as we talk about unlocking a legacy, right? We're talking about showing you how to save money, how to reduce debt, how to reduce your taxes, increase your cash flow, moving that legacy, which is your inheritance for your family, on to the next generation seamlessly, protecting everything, y'all. Own nothing and control everything, as some people would put it. So listen, we're aboard tonight. We have a sponsor. The sponsor is 12 Stone Consulting. They are a lender, and they have a special going on for you guys that own a business. If you have at least a 680 credit score and you file your taxes for the previous 2 years, so that's 2022, 2023, they're offering lines of credit and loans. You know, we're not talking about merchant cash advance loans, and we're not talking about credit cards. I said lines of credit and loans. And we're talking bank rates in the 5 on up to 15, depending on your specific situation and what you're trying to accomplish. Dollar amounts as low as 50 to 300,000, but that will be brought to you by 12 Stone Consulting. And if you'd like to know more about that, just DM me, or you can go to 1212stone, STONE, consulting.com. Hey guys, I want to remind you that we do have a YouTube page. We also have a Facebook page, right? Keith Robertson Fin Coach. Show some love. You know, please go there and like, share, subscribe. You know, if you feel like the information that we're bringing forward is one that is useful for you and your family, please do so. But come on in the room. Come on in the room. Going to be talking about CIA today. That's right, credit, income, and assets. I got a lot of questions about credit this week for some reason. Maybe because of the season, as we're going into the 3 most robust retail times each year, right? Halloween, Thanksgiving, and Christmas. Maybe people are starting to count those dollars. But again, I just want to thank you for tuning in. Well, let's go. All right, guys, let's get this show on the road. So, you know, like always, we're going to start with a bit of economical news, right? What's going on out there? So right now, the big story is the actual reporting. Did you have businesses reporting their earnings right now? And so, you know, things are pretty much in line. You know, businesses are appearing to be successful in how they're reporting, but you got to always keep in mind they lowered that expectation already. They'll bring that expected number down, so when these businesses come in and report, it seems like they're doing better than what they really are. But next week we got Apple, Microsoft, and Google. They're going to be reporting, and later on in the month, of course, Nvidia, they're going to be reporting. You know, Nvidia, ChatGPT, you know, they had a little I guess correction in their stock, but it's still, wow, it's trading way up there, you know, so you need to take a look at that. And as far as speaking of trading too, today we hit an all-time high. The market had gone up, the S&P 500 had gone up as high as 5,875 today, which was a record high. It has never been that high before, and it stayed that way. What was it? Probably about 15 minutes. And then it came back down, of course, resting this evening at 85.41. But again, see, as I'm telling you guys, when you see that market go up like that and it comes back and the market does some type of correction like it did on on Tuesday. If you've been watching your stocks, you could have got in and you could have realized that gain from Tuesday down at almost, listen, Tuesday was at around about 5,800, all the way up to that 58.78 would have been a pretty good win for you. But again, listen, guys, this is not investment advice. This is just for educational purposes. Okay, so we're just sharing information and giving you the facts of what's going on out here in the world, right? Retail report came out. The numbers were better. Again, they're saying this economy, right? This economy is robust. This economy is still going. I just told you about an all-time high, and it's steady pushing. People still have money. They're still spending money as we go into this election cycle, right? And real quick on the election. Whatever dog you have in the race, vote for somebody. Whether it's Trump or Kamala. Ms. Harris, Vice President Harris. If you're gonna vote, just vote for somebody, or not. You don't have nothing to say, but stay focused on Congress and Senate, because you got to realize they're the ones that put those bills forth. Now they're able to move it in front of the president, but who's gonna control the House and the Senate? That's gonna be key. But getting back to the economics, right? The National Association of Home Builders, they actually came in not so good. So their report came down. Now what we have going on tomorrow is going to be building permits. How many building permits were actually obtained? They're estimating that they're forecasting about 1.4 million building permits. Right? That's what they're estimating. For back in September it was 1.8, so that would have been down a little bit to 1.4. But so we're going to see what's going on, because again, last week we talked about the consumer price index, and they stated that prices were down a bit. And hey, I'm shopping and I don't see my prices coming down. And of course the PPI, which is the producer price index, that came out, and that was a bit off as well. So the cost of goods that these producers are using or producing, let me say it a different way, the materials that people are getting to create these things that they're selling, right? Those prices were up as well. But hey, we're gonna look and see what's going on. What else we got? Like I said, retail report was up. They were estimating 0.1, and it was 0.5. Now they were really thinking it was going to be more like 0.8 or even 1% higher, but we came in at 0.5. And you keep in mind 20% of that is the auto industry, right? But listen, guys, we're in a great time now. Don't sit back listening to. Well, I'm not going to tell you what to do. But you need to do something. We can sit back and talk about the end of the world is coming. All this is about to happen. But, day after day after day, we're still living. So when you are ready, you don't have to get ready. If you stay ready, you don't have to get ready. Isn't that right? So listen, guys, your 10-year yield is up now. Your 10-year yield is coming in about 4.5 around there. The 10-year treasury yield, right? So you could actually go in and get your return there for a period of years that you would choose to. CDs are doing the same thing, but always keep in mind, I done told y'all the best place to put your money was in an insurance policy. It really is, when we look at it on that consistency. You don't have to worry about the market goes up and the market goes down. You have a contract, right? A contract, and you will get that contract fulfilled. What else was it something? I got notes up here, y'all, because I don't want to get off point. Is there anything else I want to touch in the economy? Well, no, we just want to see what's going on with the building permits next week, which is going to tell us what's happening truly in the housing industry. People are steady talking about it's going to be a crash in the housing market, but you got to keep in mind there's a lot of people out there with these super low interest rates that have kept their houses because they couldn't sell the house, because if they sold the house because of the price of housing, it didn't make sense, because they're going to buy the house comparable or possibly less. So why go in 30-year debt again when you already have that, right? So there are many people that's out there now. As far as new buyers out there and being able to afford homes, you need to look into NACA, okay? NACA.com. Look into NACA. and see what they can do for you. Because you can get interest rates below retail rates there, and we're talking about 100% finance. But there's more to it, to that program. There's more to that program. You need to take a look at that. You need to look at VHDA and some of these other government programs that are available for you. If nothing else, just to get educated, so at the point in time when you're ready, you're able to move forward. But one of the things that'll stop you from moving forward is that CIA. That's right. Not yes, right. The CIA can stop you from buying a house. And the CIA that I'm talking about, I'm not talking about the Central Intelligence Agency. I'm talking about your credit, income, and assets. Okay, guys. I had a few conversations this week, and I'm seeing individuals that have been turned down for various things, right? Turned down for various things. And I'm quite sure individuals out there, you have been turned down from something, right? Where you did not qualify. They told you didn't qualify, and they sent you this ambiguous letter that really didn't tell you why you didn't qualify. But what did you do at that point? Did you investigate your credit to find out why you actually didn't qualify? Or did you just wait till the next time and you kind of, like in Vegas, you roll the dice? Oh, I'm not going to get it. I'm not going to get it. That is not how we operate when we have an understanding of financial literacy. Credit, income, and asset is another aspect of financial literacy. We need to investigate why was it that we didn't get qualified. Again, I'm an underwriter by trade, and what clients are able to do when they come to me, we actually pre-underwrite them before we move them into any type of loan products. Now, I know I've been talking about financial services for the past couple weeks, and this is where I'm going to stay. But a part of that, right, being a personal finance coach, I need to understand how to structure the individual so they can move into various different types of financial situations that's going to benefit them. If you have a business, right, I need to make sure that you're in the right type of loan, that loan is going to benefit you in the long run. If you're in some type of loan that's detrimental to your financial health, okay, we got to understand how to get you out of that situation. If you have credit issues, your credit report, in which we're about to talk about now, is not one where you're able to get credit extended to you. Let's find out why. Is it because of various reasons? Your debt to income is stopping you from actually purchasing. Could it be are your scores down because of your credit utilization? Because you got to keep in mind, right there. I'm going into the credit report now. That's C, right? I'm going into the C. All right, the credit report. So when we look at the credit report, there are different criteria of the credit report. Of course, we have TransUnion, we have Equifax, and we have Experian. Now, previously, what a person could do is they could go in and say, hey, I'm going to apply for something and pay all their debts down. And they could go in and apply, got the scores up. But there are models now that would look back 6 months and see what was that credit history over a 6-month span. Some lenders are actually utilizing that. Okay, so keep that in mind as you begin your journey to pursue something in the financial realm. Okay, if you are ready, you don't have to get ready. I keep saying that, right? Get Established show. They're on Mondays at 8 o'clock on YouTube. Big shout out to you, Big. But anyway, listen. When we talk about the actual credit itself, right? The first part of it is your personal information. This is why you need to make sure you at least do it once a year, get an annual credit report, and see what the information is on that, first of all. Because, when you get turned down, do you actually go through and get that credit report to see what's up there? Many people don't. Like I said, they wait the next time to roll the dice. But the first part is your personal information. Of course, your name. You want to make sure your name is correct on that credit report. Your first, middle, and last name as it's being reported up there. Your addresses, you want to see if your addresses are correct. Your previous addresses, you want to see if they're correct as well. Because a lot of times I'm going to say a lot of times, but what could happen, right? When you try to apply for something and you go back into that system and it's electronic and they want to ask you security questions to see if it's you, they may be pulling from the credit bureau an address that you forgot about, or one that you didn't never really live there. Maybe it was a significant other or a family member that you applied for something with their address, or you were a co-applicant or something, and that got infused into your credit report. Okay, so that personal information, you want to make sure that's right. And then after you, of course, your again name, address, make sure that's right. Your employer, is your correct employer down there? Do they still have that employer that you had when you were a kid? You know, you got a Hardee's down there, 20 years ago, and now you're working into some professional firm. You know, you want to have that. Just have your information correct, right? And then from there, it's going to give you again your three scores. Okay, you're gonna have your TransUnion, your Equifax, and your Experian scores. TransUnion, Equifax, and Experian. And the way we look at that, we look at the middle score. Now, dig this. It's not you have your Equifax, TransUnion, and Experian, and TransUnion is in the middle. No, no. What it is numerically, if you have a 1, a 10, and a 20, that 10 is your middle score. That 10 could be to your left, your 10 could be to right. Whatever the numerically, whatever that middle score is, that is the score that's used to actually provide you credit. Now, a lot of the creditors will use TransUnion and Equifax. Not many use Experian. But that's up to the creditor, right? They report to who they want to report to, and they pull from who they want to pull from. And then from there, okay, you go into your accounts. You're going to have three different types of accounts. You're going to have a revolving account, which is your credit cards, right? They revolve, right? The balance goes up, it goes down. Your payment goes up, goes down in accordance to that balance, right? And how it's spent. And so you want to make sure that your payment history is correct. If your payment history is not correct, that's going to lower your score. If they're telling you you're missing payments and you know you didn't miss a payment, and you see that on your credit report, then you can make an inquiry. And what does it mean to have a late payment? Let's talk about that real quick. So if your payment is due on the 1st and you make it on the 10th or the 15th or the 20th, that's not late. That's right, that's not late. And some of these creditors, they're they're vicious for doing this. If you're late 15 days, they'll send it in and say you're late. Some I'm going to get to public records in a minute. I was going to tell you a story, but I'm going to keep going. So, but if your bill is due on the 1st and then you pay it before the 1st of the following month, then you should not get a 30-day late, period. That should not be a 30-day late. Now, okay, you have your revolving debt. Then you have installment. Installment is like a loan, right? If you have a certain dollar amount in which you borrowed, right? They gave extended credit to you for a certain dollar amount. Okay, it has an installment payment. Whatever that payment is for the term of that loan, as long as you make those payments, then you pay that principal balance down to zero on installments, right? And then, of course, you have your mortgages, right? You have your mortgages. Your mortgage could be a HELOC. It could be, home equity line of credit, right? Where that revolves, but yet still we look at that as a mortgage, okay? And then, of course, the 30-year traditional mortgage. So those are the three type of accounts that is going to be on that report in the history of those accounts. One key thing that you could always do to increase your credit score is to become an authorized user on someone else's account. Now, if you're going to pursue this, make sure that account that you're actually looking to get added to as an authorized user has some history to it. Make sure that person pays that debt on time. Make sure that debt is not, or that credit that they're going to extend you, that account, it doesn't have, it's a $10,000 credit card, and then they have that $9,000 balance. You want to make that really doesn't help you. That doesn't help you because you've almost to the point of surpassing that credit limit, right? You want to make sure that it's going to be most beneficial to you if you're going to go through the process of asking someone or seeking someone to help you by adding you as an authorized user on that credit card, right? And so then we go from there. When we look at the credit history, the older accounts, just because you have an old account, maybe paid down to zero, don't have those accounts removed. That shows your credit history. You want to have a nice credit file. You want to have utilization. You want to keep your utilization down. Your credit, when you look at all the credit that you have, you want to keep your credit utilization down. You want to keep it down to about 30%. You want to use it, because nowadays, if you don't use certain cards, what they'll do is they'll reduce your available credit, and of course, reducing your available credit reduces your score. When your available credit, because creditors look at this. Okay, you have um, $30,000 in available credit. You're only using 10,000. That's favorable. But if you have $30,000 in available credit and you're using 30, okay, you're pretty much living off of that credit, and creditors don't really like that. But anyway, we go from those accounts, right? So we want to make sure that we know what the history is of those accounts. If we have some late payments, make the creditors prove that you paid those payments late. There's letters that you can actually obtain. Now, as far as the credit report, too, another way to get your scores up is to actually, there are different softwares, and I'll share that with you. If you shoot me a DM or give me a call at 757-335-6772, I'll share some information with you as well. 757-335-6772 on some softwares in which you can use that will tell you actually how or when to pay your credit each month. Now, you may be in a position where, hey, I got excellent scores. Maybe a friend of mine, he had a 700 credit score. I introduced him to a program that I'm associated with, and what they did was they would tell him when to pay his debts, and now he has a 750. It wasn't that he had late payments; he paid his debts, but it's like when those debts are being paid, because again, the TransUnion, Equifax, and Experian, there's an algorithm, right? It's always reading. It's a computer program reading and looking for certain things, and so by paying your debts on a certain day, or even possibly a certain, we're going to say day, we're not going to go any time, it's going to benefit you. So you go from there. Okay, so you have your accounts, and you have your account history, you have your payments and all in there, make sure all that's correct, and then you go down into the public records. Now, these public records are where you're going to find your collections, you're going to have your judgments and things of that nature. You want to make sure you know what these are. I remember when I went to buy my first house. I was a young man. I used to play that game. I lived in this apartment complex, right? And I wouldn't pay my rent on the first. If you didn't pay it by the 10th, they put the little notice on your door. But hey, I knew I was going to pay it before the end of the month, or before the 15th, or on the 15th, I think it was. I was paying my rent. I would pay it, and of course, no harm, no foul, that type thing. But when I went to actually apply for my first mortgage, I realized that each month that I was paying that rent on the 15th, they were putting I had multiple collections on my credit report. Of course, I was able to get them removed immediately, because again, if the debt is due on the first and you pay it prior to the first of the next month, then that's not late. And when it comes to being reported on your credit bureau. So these are the things that you want to look at. Old judgments and things, or even some judgments that you may not even know that exist, or collections that don't exist. You may be able to get those things removed. Again, you want to talk about it further, give me a call at 757-335-6772. 757-335-6772, or you can DM me. We're here to help you along the lines with your financial journey. Now, okay, so again, one other thing I want to talk about with the credit report, and I'm going to go on to now the I, but one of the things I want to deal with is that, listen, why don't you just lock your credit report? You won't have to worry about anybody going up there trying to apply for something, or you worry about identity theft. You won't have to worry about any of that if you lock your credit report. Because what happens is, before that report can be actually reviewed by a creditor, you have to unlock that, and it takes a little while, right? It may take an hour or two to do that, so you can't go in and just say call and they remove it immediately. It's a process, but that's a safeguard to protect you, but you won't have to worry about identity theft. But many people don't want to do that because they want to make sure on those spur of a moment situations that they have access to credit. But that's something that you can do to protect yourself, right? Okay, let's move on to I. Let's go on to income. Now listen, here's the thing. Two and two. The number two is so important when it comes to as far as your income. 2 years on the job, 2 years in business, 2 years tax returns, reflecting that. Before you are able to apply for a loan, you need two and two. Just like I told you, 12 Stone, what they were offering, they're offering again an unsecured loan for people that have a 680 credit score and they filed their taxes back in 2022 and 2023. 2 years. You know, a lot of times individuals will go to these little programs for the SBA and they'll tell you need to be turned down by two. I'll never forget it. I was told this. You need to be turned down by two banks, and then you know you can go through that process, and then you can get an SBA loan. Listen, the bottom line is this: with an SBA loan, you cannot obtain an SBA loan without 2 years tax returns. So you understand? You truly need to be in business 24 months before you apply for an SBA loan. And the truth about an SBA loan, it's easier to get $1,000,000 than it is to get $50,000, y'all. Come on, think big, because the SBA loan is the only loan in which you can put your projected income in there. You can put your projections in there as far as if I got this building, if I hired these people, or if I got this equipment, this would be my income. So remember that, right? That number two, you need to have 2 years of employment or 2 years W-2 or 2 years self-employment. Now, let's talk about that. You can't, even if you're in the same line of business, right? You're a contractor, you're working for a contractor, then you get your license and you go out on your own and you begin a business. No, that's not going to work, even though you're in the same line of work. If you move from a W-2 to a 1099 self-employed person business, you have to have a 2 year history. Don't let anybody tell you anything different. When we look at less than 2 years in business, now I'm going to business, 2 years of business income, when you apply, the only type of loans you're going to be able to get is a merchant cash advance loan. Now, they have their benefits, but they're merchant cash advances. That is working capital. That is not a loan. You're supposed to have a purpose for that and an exit strategy. Merchant cash advance or credit cards. Regardless of people talk about lines of credit, I've been doing this for a long time, y'all. I'm telling you. And when the smoke clear, you're going to have you some credit cards. And they'll show you how to pull the cash off the credit cards for a fee. But listen, again, we're here to help you. We want to help you do it the right way. Make sure your company is structured properly. Make sure that your taxes are being done properly. And speaking of taxes as well, you need to understand what it is that you're going to write off on your tax returns. Because when certain things that you write off can actually be reapplied. They can be added back in and counted towards income for loan purposes when they're being underwritten. So this is why you need to get with a tax professional that can actually show you what is the right way to do your taxes, or can do your taxes for you properly. You know, just because you can write everything off, that doesn't necessarily mean that you should write everything off, but write off the right things. Okay, and then we go from there to talking about your income. Now, when you turn in your tax returns, make sure you provide all schedules of your tax returns. Don't think because you're looking at this one schedule and you see this this schedule that it has some looking like to you which are adverse numbers, right? Because you're just going to slow down your underwriting process, right? Because your CIA will affect your loan, right? Now we're talking about income. So you want to make sure that you actually make sure that you turn in all your schedules to your tax returns. Then, of course, this is the reason why, because typically what happens is the data is reviewed anyway. You want to have all your employment information, you want to have your pay stubs. You want to make sure you have your pay stubs as well, right? That's a part of the you want 2 months of pay stubs. So 2 and 2. 2 years of tax returns, 2 years in business, 2 months of pay stubs. Now, make sure if you paid every 2 weeks, make sure you have 2 months of pay stubs. If you have to merge some months together because you don't have a complete 2-month cycle, make sure you do that, right? Because what's going to happen is what's called a data verify. A data verify is going to be run upon you to make sure that your employment and what you say, if you're W-2 wage earner, a data verify is going to be ran to see what your income truly is, because that pulls the information from your employer's tax return to see how you've been paid and the information that they've reported to the IRS, right? And then if you're self-employed, what happens is it's a form that's actually sent to the IRS to get a transmittal summary of your tax return, which is called, hey Cadence, how you doing, baby? Which is called a 4506T, which is a transmittal. Your actual, it's a summary of your actual tax return. So these are the things in which you need. And listen, that's going to help you by putting all this together, knowing what your credit is, knowing what you have to have, right, as far as your income. Applying for loans is going to put you in a better position. And this is going to take us to this last piece, which is assets. Okay, liquid assets is king, right? As they say, cash, you got cash, you got checking account, savings account. That is what we would consider liquid assets. And of course, then you have other assets as far as stocks, bonds, mutual funds, real estate. We want to make sure that all of that information is actually placed on your application when you apply. You want to make sure, listen, you've heard the term that banks loan money to people that don't need the money. If you go in looking like you need the money, you possibly won't get the loan. Well, when you have those assets that you're able to put correctly on your application, then you don't look like you are in a dire straight situation. Put all that information up there, all your checking accounts, stocks and bonds, cryptocurrency, everything. You want to put it all up there. And here's another one, y'all. We're getting to my favorite subject now, which is your cash value insurance policy. That's right. That cash value from that insurance. There is that vehicle again, as I talk to you guys every week about that insurance policy. That cash value insurance policy. That is another one that's going to be added to give you a boost in that asset column. And so when all of this is put together, that CIA, that credit, that income and assets, when we know better, we can do better. Now, again, guys, make sure that you know what your credit report says, what's on that credit report. You can reach out to me, DM me. I can get you your tri-merge credit report. I'll show you how to get that. Or you can give me a call at 757-335-6772. I got to keep looking at that number. But listen, we're here to help you. We're here to help you because, again, what we do is we teach you how to move your legacy to the next generation. Because remember, we got to make sure that you have the cash flow, right? Your cash flow needs to be protected. Your assets need to be protected. Your family need to be protected, right? You want to make sure that you're reducing your tax obligation. You want to make sure that you're able to eliminate your debt. These are the things in which we teach you here in our program. So we have clients to come in and we assist you in getting your financial house in order. Your first business is your family business. And one other thing about the taxes, right? If you're on a W-2, if you're a W-2 employee and you're on your job, you've been on your job for multiple years, make sure you go back and look at your W-9. Make sure, you might have had kids or some other situations that have occurred where you were able to reduce your tax obligation. Hey, you render unto Caesar what's due Caesar. Pay your taxes, but at the same time, pay the taxes that you need to pay. Again, this is why you got to get with a tax professional. Someone that's going to show you how to do your taxes efficiently, making sure that you pay what's needed and get the return that you need. Now, even if your net income can be increased because of reduced taxes, don't spend that. Let's have a plan for that. Because, hey guys, like I always say, if we fail to plan, Andrew Gray, I see you. I see you out there, Andrew. Listen, if we plan to fail, that is exactly what we're gonna do. Let me see, hold on. I didn't say that right. If we don't plan, we plan to fail. That's what I'm trying to say. Andrew, you messed me up when I saw you pop up there, brother. One of my homeboys from back in the day. Salute your soldier. But anyway, look, guys, this is what we're about here. Again, we're being sponsored by 12 Stone Consulting. They're a brokerage in Virginia Beach. Now, the thing about it, they only do investment properties and commercial properties and business loans, right? They don't do any owner-occupied properties. If you're looking to buy a home, reach out to me. I can do some referrals for you on that. I have some guys that are dynamite in that industry. And let me hit you with this too now because again, it was, every day it was 10,000 people turning 65. Well, that has increased because of the baby boomers. I'm at the end of the baby boomers myself. Okay, now it's 12,000 turning 65. If you have your funds in a stock portfolio, you may want to think about taking it out or taking a portion of it out, putting it in some type of annuity. Annuities are paying excellent right now. I told y'all about the 10-year treasury yield and what that is paying. But if you've gotten a annuity in the past 2 to 3 years, give us a call and let us take a look at it for you, because there is a better opportunity out there for you now today. Just like a home, right? When those interest rates go down, you refinance your home. Well, hey, those annuities are your future. If you're able to get a better return, you will refinance it and do that. Well, in any case, hey guys, look, we'll be back here 8 o'clock next Thursday. Same time, bringing forward this knowledge. Of course, it's public knowledge, but a lot of times it's not public information. And again, hey, go to the YouTube page, because I go live and then I put this on the YouTube page, but I put other things also on the YouTube page. Keith Robertson Fin Coach on YouTube, Keith Robertson Fin Coach on Facebook. Go to that page as well. I need some people to start, just liking and sharing this information. Let me know that you're out there. Give me some thumbs up. Let me know that you're at least hearing me. I stopped talking about the stock market so much because, for one, we don't trade. We're not teaching how to trade. We'll show you, if you want to learn how to trade, we'll show you how to do that, but we're not talking about investing. But, I brought the information down. I'm bringing Wall Street to Main Street, y'all. Because remember, it's about these babies that are behind us. It's about your family. And remember, if you love your family, you need to get an insurance policy that's going to protect them, protect your income, protect your future. And if you're in a position where you can't, at least get some insurance that's going to be able to put you away and put you in a way, in a fashion in which your family would like to bury you, or the way that you would like to be buried, right? Or if you want to be cremated. Because it's unfair when you leave this plane that you leave that to your family to take care of, when there's ways to get it funded now. Again, I'm here to help you. My name is Keith Robertson. I am a personal fin coach. I can be reached at 757-335-6772, or you can DM me. But it's about the legacy, y'all. It's about moving your inheritance to the next generation in a fashion in which it will move to future generations afterwards, right? But in any case, thank you for tuning in to another episode of Keith Robertson Fin Coach. Look, I hope to see you next week. Peace and blessings. I'm gone now.